Well, here's something that you don't hear about very often. Real estate investors getting a refund from Blackstone. Monica Bertran explains in this Bloomberg exclusive, Monica.
And Betty, it's not something we've seen before. Bloomberg has learned that Blackstone Group is refunding some performance fees earned during the commercial real estate boom. But another way investors actually have managed to claw back, that's what it's called, cash from executives at the world's largest private equity company. Now, during the real estate boom, Blackstone actually racked up over $1.74 billion in fees as the market for hotels, office towers, and apartments soared. But a 39% decline in real estate prices has left the private equity firm in the position of having to return profits. According to a person familiar with the payments, Blackstone and some of its managers returned $3 million in carried interest to investors in Blackstone Real Estate Partners International during the second quarter, and they may pay back an estimated $15.7 million this quarter to another fund, Blackstone Real Estate Partners 4. Now, private equity funds which raise money from institutions usually pay about 20% of profits to the firm and its investment managers. If the funds remaining holdings suffer a permanent decline in value, it's called clawback. It's a provision that can require executives to give back cash distributions in order to prevent their share of the profits from exceeding that 20%. A Blackstone spokesman says the firm expects all its funds to be profitable and that any final clawbacks will be insignificant. Betty, back to you.
Monica, thank you for that exclusive story. Well, Goldman Sachs has a plan. After taking heat for months from lawmakers, now it is turning the tables and telling lawmakers how to jumpstart stimulus. Adam Johnson has those details. Adam.
Yeah, Betty, it's a curious changing of the guard or turning of the tables, as it will. Let me show you what we're talking about here. All right, you got Goldman Sachs on one side, Congress on the other. What it really boils down to is, what do you do now? How do you get this economy going? And of course, here's what everyone's focused on, extending the tax cuts. Goldman, Jan Hatzius, the economist over there, he says, forget this. It's become too contentious. You can't actually have a debate on that. He says, here's what you focus on instead. We're calling this the Goldman plan, brought to you by Jan Hatzius. He says, here's what you need to focus on, the smaller stuff, like community bank tax credit. He said that effectively costs the government about $12 billion. What you're talking about is putting money into the community banks and then telling them, giving them a mandate to go out and make loans to small businesses at the same time. He says, create a small business lending tax credit of about $30 billion. All right, that's a total of $42 billion just for the banks, again, for small businesses. And finally, something else that benefits small businesses is a capital expenditures deduction. That would be about $40. They did that back in 07 and 08, by the way. In other words, if you took your deduction for CapEx spending this year, well, it got about a 50% tax credit. Effectively, you just accelerated the deductions you would have taken later. And when you talk about acceleration, that is very key because, as Hatzius points out, time is of the essence. This is the 27th. September 15th, Congress comes back. They only have 20 days before they adjourn, and that's right, then come elections. All right? This is a big deal. Betty?
Okay, a very big deal that we're going to be debating quite a bit. But in the meantime, we've got some breaking news right now coming out. HP coming back with a counter offer, revising their proposal, now offering $30 a share for 3-par. Remember that they had counterbid yesterday for $27 per share for 3-par, and now they've raised it by $3. This boosts the premium 11% above Dell's offer of $27, which was accepted by 3-par. But as we've been saying all morning long, this is not over until it's over, and it looks like HP has just threw in another complication in all of this. So again, HP has revised their proposal, an 11% premium to Dell. We're going to have more on this. It is now $30 per share. As I mentioned earlier this morning, it seems like valuations are kind of going out the window. These two companies really want to get 3-par into their fold. We're going to have more on the stock reaction. Equity index futures are bound to open higher. We'll have more.